Jim Willey, who I put a lot of respect into his information, his takes, say these countries are being paid under the table to buy our treasuries. And you look at Japan falling apart. Obviously, they're buying our treasuries and our dollars as a lifeline as their yen continues to implode. So there are some, I would call it less than organic demand centers kind of holding things up right now. But the bottom line is most of the debt is owed to the American public. And when you realize that as all of those nations have been shedding treasuries, it's been us, the American public, that's been buying the treasuries, the money markets, the banks, the mutual funds, and us chasing yield. So as everyone is shedding treasuries, we're buying them, and the majority of the debt is owed to us. So if we can point to a villain, those bastards did it to us. They dumped the dollar. Saudi Arabia is no longer taking the dollar exclusively, incentivizing all of those countries who have held dollars for 50 years and stockpiled them to buy oil, giving them reason to no longer hold them and to sell them and to let them go. And what starts out little by little can very quickly turn into a flood of de-dollarization. And as those dollars hit our shores, the impact is a rising interest rate environment.
Finance expert Andy Schectman exposes a shocking strategy. A major country bribing others, including US allies, to undermine the US economy. With US debt skyrocketing to $35 trillion and unfunded liabilities exceeding $120 trillion, Schectman reveals how these covert deals are incentivizing nations to abandon the dollar. He discusses how the de-dollarization threat is real and growing, creating a potential economic crisis that could shake the foundation of global finance. As Saudi Arabia and other nations shed their dollar reserves, the synthetic demand for the dollar is eroding, putting the US in a precarious position. And Schectman explains the ripple effects of these actions, including rising interest rates and financial instability. He highlights how the US government's asset base, just over $5 trillion, is vastly outstripped by its liabilities, creating an alarming economic situation. This economic manipulation, combined with increasing distrust in US financial stability, could lead to significant repercussions for the global economy.
My mentor, he was saying that the Fed had just a couple of options, and that would be to inflate or to default. When you talk about where we were then, call it 2008 or 9, you had a 17 or an 18 trillion dollar debt. Now we have almost a $35 trillion debt and unfunded liabilities in Medicare and Medicaid and Social Security alone that exceed 120 or 30 trillion. And you throw in all the entitlements like government and military pensions and the entitlements that are bleeding this country dry. In essence, we're close to, to $200 trillion. One of the things that people don't understand, this country has plenty of assets, but the US government has an asset base of just over $5 trillion. And if you Google it, you'll see that to be true, with the largest asset, as nauseating as it is, being student debt of about 1.6 trillion. So when our knucklehead president talks about, forgiving some student debt to the tune of a few $1 billion, it's really a drop in the bucket in respect to how much student debt there really is. And there was a law passed not too long ago that made student debt something you couldn't bankrupt yourself out of. They'll attach your Social Security in essence. But if I had to guess, I would say they came to the conclusion that they don't like either of those options, that we are broke, we are insolvent, we have a debt that really can't be paid back. 1 trillion seconds ago was 31,688 years ago. Those numbers are so big, people can't really fathom them. And I think that they have chosen what's behind door number 3, and that is to find a villain, to incentivize much of the world to shed dollars, to lose our reserve status. And look what's happened with Saudi Arabia. They did not re-up the exclusivity agreement to choose to only sell oil in dollars. And it has been that agreement since 1974 that has given the dollar its hegemony. It's created a synthetic demand for the dollar where every country in the world has had to stockpile them in order to purchase energy. And when you realize, as I've talked about so many times over the last couple of years, And so by weaponizing the dollar against Russia, and let's not be nice and call it weaponizing, because that's like calling massive inflation or money creation quantitative easing. Let's call it what it is, and that is stealing. We stole $5 billion of Russian assets and are using them to buy munitions to give to the Ukraine, the country that Russia is fighting a war against. That trust is gone. We have defaulted on our obligations. We have chosen our own aspirations, our own idea of what is considered just, where we can say, you know, to Janet Yellen can say to CNN that if China gives 1 penny to the Russian war effort, that we will sanction their banks, their companies in Beijing itself. Never mind that we've given $260 billion with no congressional oversight to the Ukraine, let alone Stinger missiles and F-16s and the intelligence on where to fire them. We don't count. The world looks at us as being hypocritical. And so when you realize we have incentivized the world first by signing the executive order to go green, pulling out of Afghanistan like a bunch of I don't know what you call it, certainly not America, and leaving 3,000 Americans behind, and turning our back on the interpreters and the freedom fighters who were promised visas. This was not lost on the rest of the world. And the escalation of de-dollarization really started right after the pullout in Afghanistan, with Saudi Arabia signing a military protection agreement 2 or 3 days later with Russia. It is our protection of the Saudi kingdom for the last 50 years exclusively that has given us the dollar hegemony. So we have incentivized all of this, and then we turn the country into a place that most of us don't recognize, with the lawlessness and the open borders and the questioning to the judicial system and the electoral system. All of these things I talk about are all part of a bigger picture. And if you believe that they are trying to find a villain, option number 3, to blame all of this on, in order to roll out the CBDC, in order to reset the system, a system that is far too far indebted, way over leveraged in terms of its debt, and way undercapitalized in terms of its asset base, both publicly and in terms of government. It's much easier when you realize that the majority of the debt is owed to the American people. Medicare, Medicaid, Social Security, government military pensions. Social Security, $77 trillion in the hole. Medicare Part B, $99 trillion. Medicare Part D, $22 trillion. All of this debt, and if you look at who's been selling all the bonds over the last year and a half, it's the foreigners who have been traditionally, more or less funding our exorbitant style of living. And it's Japan and China and Russia and Saudi Arabia. All of the BRICS nations are shedding bonds. Yet we're supposed to believe that the Cayman Islands and the United Kingdom and Ireland, all of which who have their own problems, are the biggest purchasers of our treasuries. If you believe that, I have a bridge to sell you. Jim Willey, who I put a lot of respect into his information, his takes, say these countries are being paid under the table to buy our treasuries. And you look at Japan falling apart. Obviously, they're buying our treasuries and our dollars as a lifeline as their yen continues to implode. So there are some, I would call it, less than organic demand centers kind of holding things up right now. But the bottom line is most of the debt is owed to the American public. And when you realize that as all of those nations have been shedding treasuries, it's been us, the American public, that's been buying the treasuries, the money markets, the banks, the mutual funds, and us chasing yield. So as everyone is shedding treasuries, we're buying them, and the majority of the debt is owed to us. So if we can point to a villain, those bastards did it to us. They dumped the dollar. Saudi Arabia is no longer taking the dollar exclusively, incentivizing all of those countries who have held dollars for 50 years and stockpiled them to buy oil, giving them reason to no longer hold them and to sell them and to let them go. And what starts out little by little can very quickly turn into a flood of de-dollarization. And as those dollars hit our shores, the impact is a rising interest rate environment. And as interest rates rise much higher than the 5% line in the sand that I think Powell realizes will blow things up, will be done by the market to compensate for inflation or the loss in purchasing power, not by Powell and the Fed. It'll be done by the market. And at that point, the CPI, which is the CPI, will have to be more forthright and more honest with its with its valuation of inflation. And as rates rise to compensate for that inflation, the byproduct of rising interest rates, of course, is trouble with the banking system, which is over leveraged and undercapitalized, with the stock market, which is inversely correlated to this, the bond market, inversely correlated to it. Everything is inversely correlated to it. And when you realize the number 2 economic advisor, Lael Brainerd, is a modern monetary theorist, this is her wet dream. She wants consolidation of the banks. She wants it all to blow up so she can come in and say, look, you guys, I know this sucks. They did it to us. This is about patriotism and starting over and reining in and uniting this country under a common goal. Just take the CBDC and you too will be made whole. Now, is this pie in the sky? Maybe. But when you ask yourself, why the hell would we have done all of these things? Why would we destabilize all of the things that are sacred to this country? Elections, judicial system, immigration system, create lawlessness and craziness in the cities. All of this stuff on top of weaponizing the dollar, on top of creating $1 trillion in debt every single 100 days, if not sooner. All of these things are too stupid to be stupid. And I think there are going to be ramifications for it. And the ramifications will be of massive de-dollarization and de-treasurization. And we are seeing that. In fact, we just saw the head of the BRICS New Development Bank, Delma Rousseff, come out and say, yeah, we've agreed to a new settlement currency, which will be called the unit. And that unit will be a combination of 40% gold and 60% BRICS currencies. And it's quite fascinating. You can go to the unit website, read their white paper. It's 40, 50 pages. It's worth reading. And their Q&A, it'll blow your mind. And it will all be traded on the Project M Bridge, which I've been talking about for 3 years.